What's good, YouTube? I am back with another video. We are gonna carry on with the bootcamp today. It's gonna be, I think it's day 14 if I'm not mistaken. Yes, day 14. We are gonna do liquidity sweeps. Okay, and why liquidity sweeps are important and all those different stuff. Okay, so firstly, liquidity sweep, what it is. Okay, it's a sweep of a high, or it's a sweep of a high or a low. Okay, I'm gonna write it down and then I'm gonna show you guys examples. And then we are gonna go on to the next one, then I'll show you guys. So we're just gonna carry on like that. Okay, so this was a good example of yesterday. This was on the 4 hour. It happens on any time frame. It happens anywhere. It's plain and simple. Okay, so firstly, what is a high and what is a low? Okay, let me also write it down here so that you guys don't get confused. Okay, high and a low. Oopsie. Okay, so a high is a move up, then a move down, meaning it's in my case it's a black candle, it's a blue candle, then a black candle. But if you use the default setting, it's green candle, okay, so if it's a green candle, it should be a green candle, then a red candle. Okay, and a low is a, one sec, my bad. Okay, my bad, I'm having some network troubles, but it's no biggie, we don't need network. Okay, so a low is then it's a move, oopsie, it's a move down, then a move up, meaning it's a red candle, then it's a green candle. Okay, so this is high, it's a move up, then a move down, it's a green candle, then a red candle. Okay, that's a high, so let me draw it for you guys. So that when you get a move up, then a move down, okay, meaning this is the high. It's the highest point of the move up and the move down. Okay, so let's quickly draw it with candlesticks. So this is a green candlestick, so it's a move up, and then we have a red candlestick with, okay, and then this is, oopsie, this is the wick of the high. So you take the highest point of that wick, it's that one. Okay, that's the high. Okay, so let's say now this was, let's say this one was like this and this one was like this, meaning this is the highest point. I know it's the red candle, but it is still the highest point of the high, so that's the high. Okay, so if you guys don't understand, go back and rewatch. But yeah, okay, so a high is a move up, green candle, and then a move down, a red candle. A low is a move down. Okay, so it's a move down and then a move up, and then you take the lowest point of that low, the candle closure, and then you have the wick. Okay, so then that wick is the low. Okay, so I have that already, so let me just move this properly over here. Okay, so let's go into some chart view, showing you guys what high and lows are. Okay, so as you can see over here, this is now a recent price action. This is from Monday the 19th, like a few days ago. Okay, so we can see over here, so this, firstly, the blue candle is your guys' green candle. It's the move up, and the black candle is the move down. It's the red candle. Okay, so you see, whoopsie. Okay, so as you guys can see, we have a move up, so it's a blue candle, and then a move down. So meaning that is the high. See, meaning that is the high. Okay. Now you can see over here we have a move up, the blue candle, and then a move down, the black candle, but the black candle's wick is longer. Okay, meaning this is the high. Okay, so with that being said, let's go with the lows. So as you guys can see here, we're making a black candle, a red candle, down and then up, meaning this is the low over here. Okay, we're making another one. We didn't come down, sweeping it, moving, meaning coming past this low, the most recent low, then going upwards. We only did it here. Okay, but this is another low, so you can see here, move down and then move up, meaning it basically looks like this: move down, move up. That's how it looks. Okay, so you can see here we have a move down and then a move up, meaning this is the low. Okay, so we can see the low over there. My bad. So we have a low over there and a low over there. When two lows are this close to each other, we call it relative equal lows, which is a very strong draw on liquidity, especially when we are trading against it. So meaning by that is, we see over here, let's go on yesterday's price action. Okay, so this was market open over here. We see over here, this is the two lows that's the closest to each other. So we can wait for price to come down past this and then having a retracement back up. Okay, so that is basically highs and lows. It's plain and simple. So now that you guys know highs and lows, we can just go on to liquidity sweep. Okay, so what is a liquidity sweep? It is a sweep of a high or a low. Okay. Okay. We wait for price to sweep out that low or high, and then waiting for a reversal. Waiting for a reversal into our confluences. We're gonna come into that later. Now we're only doing liquidity sweeps. Okay, so we wait for price to sweep out the low or the high, and then we wait for a reversal. Okay. Okay, let me explain that one for you. So as you guys can see over here, let me just remove my indicators. Okay, so as you guys can see, yeah, we have relative equal lows over here. Okay, it's on the 4 hour, so it's very strong because higher time frame holds higher power. Okay, so as you guys can see, this is the low, this is the low. So we come down, we consolidate a bit, we come down, we sweep out this low, these two lows. Okay, so meaning price comes down, we create a wick down below, So we discontinue those two because we already swept past it. Okay, so we can see over here now, we came past it, okay, on the higher time frame, meaning we can scale down to a lower time frame to get confluences to enter to go long. Okay, but we can see over here that we first came down, okay, having a bit of retracement, then going down, blue candle, black candle, meaning green candle, red candle. So this is a high over there, you see, and we broke structure over the high. So you guys don't know what it is, it's okay, we're gonna have a separate video about it. Okay, so you can see over here, after sweeping out the lows, these two relative equal lows, we have a break of structure on this high over here, meaning price wants to go even higher, coming to fill in this imbalance over here, which I told you guys we're gonna do, and we did it. Okay, we can even let's even see, I can show you guys. Oh, I forgot about it, wait one sec. Okay, I'm back, my bad. So having some network problems, but it is okay, we're gonna still take the video. Okay, so this is on the daily time frame. We can see over here. Okay, so we can see over here, here's a move up, then a move down. That's the wick. Okay, we can see over here, we're making a high, then we come up, we sweep the high, okay, and then we dump. Okay, some different examples as well. Here's another one. Here's a move up and a move down. So that's the high. We come up, we sweep it, smick work. Okay, we can even do, okay, so that's highs. That's if we sweep highs. Here's a move down, move up. This is the low. Okay, price comes down, sweeps it out, rotate. Okay, it's plain and simple. That's why we target high time frame liquidity sweeps, meaning high time frame highs or lows. So let's say now in today's price action we come down, sweeping out this low, then I will be looking for longs all the way till this high, and this high over here. Okay, if we come up, we sweep out these highs, then I'm going to look for this low, and this low to be hit. It's plain and simple, you see. Okay. Okay, so the third one is, so we said wait for price to sweep out the low or high, and then we wait for reversal. Okay, so the best liquidity sweep to find is on the high time frame, meaning the 1 hour, the 4 hour, and the daily candle. Okay, those are the highs and lows that you need to mark out. So before any trade session or whatever, you mark out the 1 hour, 4 hour, and daily highs and lows. Okay. Whoopsie. Okay. Okay, then we identify London and Asia session high and lows. Okay, I'm gonna do a different video of the different sessions, London session, New York session, Asian session, and all those. For now, we need to identify London highs and Asia highs or lows. Okay, meaning we're waiting for price to target that, then we go from that. Okay, so okay, I can't. Okay, it ruins a bit of the video, but it's okay. Okay, so you can see we need to identify London high and low. If London or Asian session low or high was swept, we wait for our confluences. Okay, and after we swept out the high or the low of London or Asian session, we wait for our confluences to be created. Okay, and then afterwards, after it's created, we wait for the retracement into our confluences, and then we enter. It's plain and simple. Okay, and we can see over here, that's gonna be all for this video though, because this is all that you need. Liquidity sweep, it's a sweep of a high or a low. I explained to you guys what high and lows are. Okay, number 2, we wait for price to sweep out the high or the low. We wait for reversal. It's gonna be on the high time frames, 1 hour, 4 hour, or 30, or the daily. 30-minute I used, but I discontinued it because it's not relevant anymore. Okay, number 4, we need to identify Asian and London session highs and lows. Okay, and if number 5, if London or Asian session highs or lows get swept, wait for confluences to be created, waiting for our retracements to enter. Okay, so that's gonna be the basics of liquidity sweep, highs and lows, all in one. But yeah, hope you guys enjoyed. Hope you guys stay tuned. Love and support you guys, and I'll catch you guys in the next boot camp. Let's go.